It is 20th of October and Bitcoin is sitting at around 50 lakh rupees. In October 2020, Bitcoin was worth 9 lakh rupees and right now it's at 50 lakh rupees as I can see. Bitcoin has been the highest performing asset in the last 10 years. This begs the question, what is Bitcoin? Why should you invest in Bitcoin? Is Bitcoin a scam? How can you start investing in Bitcoin in India? Will it be banned in India? A lot of questions you might have about Bitcoin. In this video, I thought of sharing with you exactly what Bitcoin is and how it really works. And with me, I am joined with Aman Sindhuja. He has been working in the crypto space for a long time right now, since 2017 and even before that. In this video, he talks about exactly what Bitcoin is, how it really works, and why it has value. Why is it worth 50 lakh rupees right now at this point, as I can see on my screen. So I hope this video will be insightful. Make sure that you hit the like button and subscribe, and let's get into this video. Hi Aman, thank you so much for joining me here for this video. Please introduce yourself to the audience that is watching this video right now.
Thank you, Ishan, for having me. I am an engineer who have worked in startups to different corporates, came across cryptocurrencies in 2016 because of my gamer friends, started mining, did a portfolio management with friends for the family fund and all. 2018 started my first blockchain startup, which we were building the products in the area of identity and document. Then I started Zubi to bridge the gap between industry and academia. Because in India, a lot of engineers, 1.5 million engineers graduate every year, and almost 85% of them are unemployable. So we wanted to bridge the gap by teaching them certain emerging technology skill set like blockchain AI, crypto, IoTs, 5G and all. We did like a couple of cohorts. Then my interest was very much aligned towards cryptocurrencies again. So moving at this point in time to weed out the complexity and noise in the crypto space. That's a quick background about myself. In last 4.5, 5 years, I've taught over 10,000 plus people on cryptos and blockchain, and I'm a TEDx speaker. I'm on the board of studies with Amity and Bennett University, and I have also taught at Upgrad.
Awesome. All right, let's get started with crypto. So I started investing into crypto back from January 2021. That is when it was going crazy, right? That is when it broke the $20,000 level. It went all the way to 30,000. So I got interested. I opened up my accounts on these exchanges and I started investing into them. So a lot of people were not aware of what these things actually are, and they're just going behind the hype कि ठीक है Dogecoin में डाल दिया या फिर Bitcoin में डाल दिया. It's important to understand what these technologies really are and the applications of them, besides just trading and like gaining whatever capital returns you get. So let's talk about Bitcoin. That is the most talked about cryptocurrency. That is the oldest, the main cryptocurrency. What is Bitcoin, and what is like the history of money according to you? How did this really start, and why does it have value?
Right, so you need to go back many years. Money is a social agreement between two people to exchange either the value or some commodity exchange. Long back, our ancestors used to do a barter system where I'm giving you potatoes, they're giving me tomatoes in return. It actually failed because of a lack of value, because you could not be able to measure that how many potatoes needs to be given with respect to the tomatoes. Then from there, we explored different type of currencies. They were like seashells. They were like also wheels, which started coming up as a part of the kingdom. People used to take it as a notion to transact between one society to another. But then it was not very much acceptable by the different geographies. Then we moved to a standard. Of course, there will be different interventions which happened in between. Then we moved to a standard which was like gold and silver. But what was happening with gold and silver, it was very difficult for carry from one place to another. And there was a fear that it may get stolen as well. So from gold and silver, we introduced the paper money, which was backed by gold. And then there was a saying that whatever the gold which is there in the reserve, we would be printing the US dollar notes accordingly. But 1973, what happened? This rule got removed by President Nixon in Bretton Woods Conference, and the countries had the flexibility to print the notes basis their country's requirement. And of course, there are different economic factors which comes into play.
Now, one big question people have is how can you buy Bitcoin and other cryptocurrencies in India? That's where you can look at Vauld. Vauld is a earn, borrow and trade platform where you can get some of the best market rates for buying cryptocurrencies. The interesting part about Vauld is that just like you have a simple bank in which you would deposit money and you would get paid in interest, you can also do the same thing when you deposit crypto in a Vault account, you get paid in interest. For example, interest rate for Bitcoin and Ethereum is at 4.6% annually. And if you were to get a fixed deposit, you can get up to 6.7% interest rate for Bitcoin and Ethereum. And for a fixed deposit in stable coins on Vault, you can get as high as 12.68%, which is higher than any FD that you would be doing on a normal bank. Vault is insured by BitGo, which means all of your funds are 100% secure, and entrepreneurs like Peter Thiel have invested in Vault as well. So you can take a look at the link in the description to start with Vault. When you use my link, you get a 40% rebate on Vault. So you can take a look at that if you're interested. And now let's get back to the video.
Then from there, we comes into the plastic card, which are like the debit cards and credit cards. So what was happening in between is the countries don't really have the fixed supply of the currencies, because if you could print basis your economic condition, then you may end up printing more and more currencies as well. Now, one of the case which I wanted to share was of Venezuela. So Venezuela is a country where oil crisis happened. So the country started printing in more and more of money. So what happened with that case is long back, the money which was required to buy a 2 BHK apartment, it's the same kind of amount of cash you require to buy a coffee, because the devalue of the currency started happening. And if you look at 1947, India got its independence and the dollar to rupee conversion was 8 rupee. And right now we're sitting at 70 to 74. So this raises a question that what's happening? Then fast forward to 2008, we have seen the financial crisis because of subprime loans. The housing bubble happened, and which made Lehman Brothers collapsed. So in this, everything is revolving around one common notion, which is the money is controlled by centralized institutions, which are banks, and they have the power, the countries have the power. What do we do for the people who don't really have an access to the bank account? How can we actually have a particular currency which operates without a middleman? So the group of people or anonymous people have came up with the concept of Bitcoin, which is a decentralized currency. What do I mean by decentralized currency? There is a fixed supply, and the supply is fixed and it will be generated over a period of time. So right now, close to 19 million Bitcoins are already been minted, and the total supply is 21 million. The last Bitcoin will be minted into 2041. So that's the kind of 2041 to 2100, depending on the problem difficulty. So the supply is fixed. Second is the fractionalization. The Bitcoin is divisible to 10 to the power 8. And third is you don't really need a middleman to do a transaction. Right now, what's happening when you do a bank transaction, you write a check. So you write the name of the person which you have to send the money to, you write the amount, you sign that check with your signature, and then you deposit the check in the check box. Somebody picks up the check and validates a transaction, that whether do you have the money in your bank which you're transacting, the other person exists on the banking network. So this whole process requires a middleman to verify or validate the transaction. Now, in this case, there is no middleman. The middleman is the technology, which is the blockchain. So the first introduction of Bitcoin was to democratize the access of finance, and Bitcoin actually lets you to be the CEO of your own bank. And in this world where close to about 2.5-3 billion people don't really have an access to financial institution, the concept, the understanding was to give the power to these people where they can transact across the globe, and they have the real money in control of their hands. So that's the quick history of how Bitcoin came into existence. And then over a period of time, different coins have started coming up. But according to me, Bitcoin is the first step to bring the democratization in the financial institutions and giving an access to the common man, and bridging the gap between different countries without really having one common currency to transact, or with having the common currency to transact.
Awesome. So let's talk about what is the use case of Bitcoin. Bitcoin, is it like a currency, like you have rupees, like we have dollars, or is it like gold? Or is it like both of them? You can do both of the things with it, because right now if you give gold to someone, they can get it, but it's not the best way to transact, right? Like rupees is much better. So just in that spectrum, where does Bitcoin lie?
See, when you talk about currency and money, there is a differentiation. So money is like where you have an asset backed, which is like gold and silver. Currency is, which is fiat, which is like paper currency, fiat currency, which we usually call it. The Bitcoin is at this point in time, considering the price which has been appreciated. So when I got into cryptocurrencies, the price of Bitcoin was barely 10 lakh rupees or less, right? And I have seen this growing from uh, few couple of lakhs or so to about 50 odd lakhs. So the idea of this whole concept is to not have a parallel currency, but have uh, a currency which can give a power to the people to transact basis their wish and need. What do I mean by that? Now imagine in India, there are a lot of people who work across the globe. They have been sending the money to their hometown, and at this point in time, Western Union and other places charges a lot of transaction fees, and usually takes about 3 to 5 days. Now, considering this use case, most of the people in Africa have started adopting Bitcoin as well as one of the parameters to transact money across the globe, as one of the instruments of remittance. So the idea here is you are making an access to global markets, which was very limited to these financial institutions like Western Union and other intermediaries who used to transact across the globe. Now, the question here arises is, can I use Bitcoin for buying and selling of certain commodities? Absolutely. Is it a gold? Basis the price, it can be treated as a gold because the price have been appreciated over a period of time. People usually call it as a digital gold. People call it that, yes, it's a new age of an asset which is giving millennials an access to all these all these new asset classes where they can appreciate their money and of course build a wealth over a period of time. So the use cases arise both the ways. So it can be used for the transaction, and it is being used across the globe. There are people which are buying the flight tickets using the Bitcoin. There are people who have been only buying just to keep it as another asset class. So the use cases varies depending upon the kind of a capacity. Somebody who is having a multi-million dollar definitely would not want to use this for the transactions of micro purchases, but somebody who have been using it like $50 $75 and wants to have an anonymity on top of it with for the transactions can use the Bitcoin for buying and selling of different commodities.
Mm-hmm. Got it. What is the transaction fee involved whenever someone transacts, or let's say someone buys something using Bitcoin?
So it totally varies, like depending upon the network. So, like I said, in the check, you have the bank who charges you the transaction fees to validate the check. In this case, you have a network which is constituents of the miners. These miners are the computer who validates the transactions. Now, these miners will validate the transaction basis the computing power which is required to validate. Now, what do I mean by computing power? Computing power revolves around the electricity. What do I mean by the electricity? So you have hashing power. What do I mean by hashing power? Low, it you can solve it. If there's a problem which is like 4x is equal to 100, you can easily find x, the value of x is equal to 25. As the problems start getting difficult over a period of time, you require large computers, you require heavy miners, you require more consumption of electricity. So when you require more consumption of electricity, definitely the cost increases. However, the best part here is to transact even $100 to $100 million. The transaction fees is very cost effective comparing to the present institutions which are charging you basis the amount which you are sending. The best part here becomes is you don't really pay basis the amount which you are sending. You only pay basis the network fee which the miners require to validate these transactions. And it makes more global and inclusive since these networks have evolved over a period of time, and these are intertwined network, and these of course, these transactions require some program to run by the miners to account for the unique hash addresses, which changes basis the transaction, which makes the whole concept secure, and because of which we call it this network as a hack proof.
Got it. You talked about miners and hash power. You can just like explain what is the blockchain exactly doing, right? People have heard things like ledger and decentralization. So how does that really work in the blockchain level of the Bitcoin network?
So I'll just decode this term block and chain. In each block, you have different transactions. Now, what are these transactions? These transactions are if Ishan is sending a money to me, if Ishan is sending the money to somebody else, if Ishan is receiving a money, all these transactions are recorded. Now, these transactions are recorded in a ledger. Now, what is a ledger? Think of ledger as an Excel sheet. These Excel sheet are not uh, not controlled by anyone, but maintained by everyone. Now, who are these everyone who are maintaining these Excel sheets? These are the miners. Now, what do I mean by the miners? Imagine in your family, your ancestors used to earn some money, your grandmother used to spend some money, your father used to earn, your sister used to spend. All these transactions are recorded on a one particular ledger. Now, imagine this ledger is being shared from one place to another, and everyone can see what all transactions have happened, but nobody can delete in these transactions. And nobody controls this. Everyone maintains it, but nobody controls it. So Bitcoin emerges as one of the first digital asset classes which operates on this ledger. So I usually call what internet did to communication, Bitcoin is doing to financial transactions. So Bitcoin emerges on the internet over the past decade, relying on the macro trend of the economic interactions, which are increasingly happening through digital. Like music, television, newspapers, even dating has gone entirely digital. And this is the new transformation which is happening in terms of money. Now, you talked about miners. So these miners are the computers which are validating the transaction. So imagine I send you one Bitcoin. Now, this one Bitcoin I have sent you on your username. Your username is a public address. I have signed these transactions with my private key. So it is a network which is gonna see that whose address you have entered. These transactions are cryptographically secure in nature. What do I mean by cryptography? If I'm sending this information to you, it is only decoded by using your private key. So if I'm sending this transaction, I send it on your public key. The miners pick these transactions, validate the transaction. How do they validate that the balance which I'm sending, I have it in my wallet, and the other person exists on the network? Then if it's the condition is yes, then they will transact the money from my account to your account. Now, how do they come to that consensus? These transactions, once validated, are floated in a network. Now, once they get floated in a network, you find a hash value. The hash should be done in such a manner that the previous hash block should match the hash of the next block. Now, what do these miners find? These miners find a nonce. Now, to simplify, let's take an example. 20 people are solving a Sudoku puzzle. And if these people are solving a Sudoku puzzle, if I'm the first one to solve the problem or to solve the Sudoku puzzle, then I can raise my hand that yes, I have solved this Sudoku puzzle and this is the right answer. Now, if other people validates this, that this is the right answer, then I get the Bitcoin in reward. So the miners who validate the transaction get the transaction fees. The miner who validates the block gets the block reward. Now, this block reward is designed in such a manner that when the Bitcoin was started, the block reward was given 50 Bitcoins per block, which means each block has different transactions. Now I need to encapsulate this block. I need to close the lid of this block that yes, all the transactions which are there inside the block are secure. Now, in order to do that, I find a nonce. Now, how do I find a nonce? It's a random guessing number, which means there is a puzzle. I need to guess what will be the value of X. So therefore, to guess in a faster manner, I use the computation. So therefore, they say that as the problem gets difficult, you need the high speed miners, or you need the miners which have the high transaction hash value. Therefore, you will be able to find the value of X faster. The probability increases. So whosoever is able to find the value of X. Now, what is the value of X? Which means the previous hash of the block should match the hash of the next block. Now, in order to do that, I find a nonce. So whosoever wins and finds the nonce correctly, the miner approves them that yes, this is the right nonce because it is giving the hash of the next block, and then I get the block reward. So these block rewards goes to miner, and the people who validates the transactions gets a transaction fee. So this is how the mining works in a nutshell.
Got it. Okay. What is the meaning of proof of work? People have heard about this, that Bitcoin network works on the proof of work concept. What does this really mean?
This whole concept means you're proving that you have worked, which means in order to find a nonce. So nonce is a random number, and once I found the nonce, I have to prove it that yes, I have worked to find a nonce, and this is the process, and this nonce is correct because it's giving me the hash which is linked to the previous hash block. So this is the whole process of mining. It's called proof of work, where the miners are working to find a nonce. And this whole concept is done using mathematical functions and cryptography. Therefore, the miners get the reward basis the work which they have done. So the work is from the machines, and the machines basis the work find a nonce. And once they found the nonce, they get the reward. So this whole concept is called as a proof of work.
Why is Bitcoin valuable? Why does it hold value? What are the characteristics that make it valuable?
All right, so let's try and understand why currencies hold a value. So currencies are valuable because they have a function which is a store of a value and unit of exchange. And successful currencies over a period of time, we have clearly seen, have majorly few attributes, which is it should be scarce, it should be divisible, it should have a utility, it should have a transportability, durability, feasibility. And if you look at the cryptocurrency, specifically Bitcoin, has a value because it holds up very well in these 6 characteristics, which means it is a unit of exchange. Like we spoke about, you can use it for transactions. And because of it, you also have a scarcity and divisibility. The supply of Bitcoin is fixed, which is 21 million. As the demand increases, the price have to meet with that supply. And also, there is the cost which requires to produce a Bitcoin, which is why I talked about the block reward. You get the reward basis the transactions which are validated. In order to encapsulate that block, you require the mining power or the hashing power to validate the block. And over a period of time, the problem is getting difficult. So it's a function of the problem. The problem is getting difficult. You require more electricity. You require more electricity, the cost increases. The cost increases, then of course you have to balance out with these hardwares as well. So there are 2-3 fundamental factors which plays in the price or the value of Bitcoin. Number one, it's scarce. Second is the cost which requires to mine these Bitcoin. Third, the fundamental factors which plays in the demand is increasing, the supply is limited, which is 21 million. If 21 million people have to hold 1 Bitcoin each, if somebody who have already bought many years back would want to sell it at an appreciated price. And of course, the fundamental factor also plays in with respect to the acceptability and adoption of this cryptocurrency. Like El Salvador has made it legalized, and most of the countries are evaluating whether this should be a legal tender or this should be an asset class. So the whole set of these factors plays in determining the value and price of the Bitcoin.
Got it, Aman. Thank you so much for joining me here for this video. It was great talking to you, learning about what Bitcoin is, what blockchain is, and I hope to making more videos with you soon.
Thank you so much, Ishan. It was wonderful having to be on your channel, and looking forward for more interactive sessions. Thank you.
That was the video. I hope you got to learn something from this. Let me know in the comment section what other videos should we be making about cryptocurrencies. Also check out Vauld with the link in the description. If you're still watching the video, just say I watched till the very end. I will see you all in the next one. You can take a look at my Twitter as well as Instagram. And yeah, that's it. Bye-bye.